Basically, you have an issue at Old Navy, given it's 55% of sales, 1,200 stores. They've been having the wrong balance of merchandise for a while now that was supposed to be corrected by the second quarter. They didn't switch to occasion and reopening wear as quick as they should have. They stayed with casual, and they're missing the mark. Everyone's talking about dresses, tops, footwear, all doing well because people are going back to weddings, they're going out to parties, and they're going out to restaurants. Old Navy's not positioned. And with a consumer with a household income of $75,000 and the headwinds of inflation, the headwinds of what you had going on with the cold weather spring, they're hit and their merchandise is not balanced properly. This takes all of this year. It's a lost year, and losing a CEO, bringing in a new one, we may not be back to where you need to be until 2024 to get this right.
Wow. So, I mean, it's interesting that you said that about the income levels, because I did a report earlier this week about who gets hit in consumer stocks by rising interest rates. And what I learned from some of the analysts is it's the lower income consumer stocks, 5 below that do okay, the dollar stores, and then those that cater to the higher income who are less, or I guess more immune to the higher interest rates. But those in the middle, like a Gap, get squeezed. Who else is at risk here?
I mean, when you think about the other players, it's anyone who caters to families. I mean, and these family apparel retailers have a real issue. We've heard about it, and we've seen it from some of the teen apparel retailers where it's been slow. We've heard about it and seen about it from some of the women's apparel retailers. If you're stuck in the middle with that midpoint, you got to watch. And that trade down you mentioned, that'll help the off prices over time, too. But it's that middle department stores that really gets hurt. We're going to watch Kohl's numbers when they come out, because obviously there's other things happening there, but you want to see if there's an impact, and we're watching that closely. While the reopening, high-end works on the reopening.
Gap has really been hit hard. It's now down 64% over the last 12 months. Is there a level that looks attractive to you?
Where's the earnings going to be? You're going to have a loss in the first quarter. You're going to have a year, basically, that you'll probably be lower than what you've had in the past 4 or 5 years. Do they look at an Athleta to break it off and potentially get some more value there? We know they tried a couple of years ago to split off Old Navy and Athleta. That didn't work. I think overall, the stock is dead money to move lower until we see some stability. Watch other valuations of other retailers, because this could be the opportunity. To me, this is more Gap specific, and whether it's other things that are interesting, like a Ralph Lauren, like an Ulta, like the Estee Lauders, that's what I'm watching.
That's what you like better, Ralph Lauren, Estee Lauder, and Ulta.
Oh, yes.